appreciate your show and everything that you're doing. May God bless you.
Your personal economy.
You can't say, I don't want any risk. I don't want to take any risk. I just want to put my money in a CD and forget about it. But I want to earn 18% a year. It doesn't work that way.
Conservative talk radio you can count on.
Once again, Steve Forbes. Hey, Steve, how are you?
Dan, good to be with you.
Financial Issues with Dan Celia.
Hi, Dan. I just want you to know how much I really appreciate the passion that you have.
Aligning reality with truth.
And I've got Congresswoman Bachman with us right now.
So I just want to thank you. I want to thank your listeners.
We need to save America and keep it intact for our children and grandchildren.
Now, here's your host, Dan Celia.
Welcome back, American Family Network, Financial Issues. I'm Dan Celia. All the major indices in positive territory. Well, we got the existing home numbers. They were down. Existing home sales down 1.3%. They were down everywhere except for the South in the 20 regions of the country that were measured. 1.3%. Now, they were expecting it to be down 1.9%. So if you want to try to put a little lipstick on it, you could say that, well, it's a good number because they were expecting it to be down 1.9 and it was only down 1.3. So realtors being surveyed said they don't think, here's the thing, they don't think there is cause for concern yet. I don't want to leave that yet word out. They don't believe that this is cause for concern yet. So, look, it seems to me that if we see taper in September, there's some other agenda to it. The Fed has a totally different agenda. I don't know what that agenda is. I will be happy to speculate when it happens. But I'm going to say that there's a different agenda. Because you can't, because of the inconsistency. You can't have all the numbers looking bad. Everything is looking like the economy. And here's the other thing. Because when they started quantitative easing, it was based on global economics being weak, thereby impacting the U.S. economy. All the U.S. economic numbers being bad, particularly unemployment. And when you see all of that slipping, if you did it for that reason, don't you need to continue it for that reason? Now, let me make something clear here. I'm not making a case for continuing the taper. I don't think we should have ever had the first quantitative easing. I've been whining about it for 4 years. I'm not making a case to continue it. What I'm making a case for is the lunacy of the Fed. And I'm beginning to draw some conclusions and make a case for, now I won't say that because my phones will light up and I'll go crazy. But I'll phrase it a different way. I am making a case for confirming that the Fed really has no clue what they're. Do you know they haven't been right yet? They've never made an accurate prediction. Ben Bernanke hasn't made an accurate prediction in over 5 years about the economy or about the effects of easing or anything else. So I'm really struggling if September they do start some easing, which I'm all for. I'd like to see them just stop it totally, which isn't going to happen. So I'm all for it, but I'll be shocked if they do it. So the markets are up right now. We get another bad number. The markets are up. If we get a bad employment number a week from Friday, we get a bad employment number, look out, the Dow's going to go skyrocketing because everybody's going to be dancing on Wall Street. You know, and it's got nothing to do with the fundamentals of the economy. Make no mistake about it. So anyway, another bad number. We'll have to wait and see what happens. Gold, let me see if any of the commodities reacted. Let's see if I can find it. So right now, gold did it's down off its highs. So gold is backing down a little bit. off its highs. Looks like could go negative. By the way, it's moving. Silver did go negative, by the way. Copper went negative. Copper very, very driven by housing, by the way. Copper is the Einstein of economic indicators. I mean, it really is. Copper is a great indicator. If you want to know what the future of the economies globally look like, really spend a lot of time and do a lot of homework and tracking and following. Do some back checking on copper and see the links. But copper is very, very important. What did copper do? It's down almost 0.75%. That's a pretty significant move for a commodity that's already down. We see corn and wheat still staying down. There's still downward pressure on corn and wheat, which is kind of surprising. I wasn't expecting that by the second hour here of the program. So anyway, oil is still up, still in positive territory. Oil 109.83, so it's down below 110. It was over 110 at the open of the program. It is now at 109.83. So a lot of oil is going to be based on now Syria, Iran, Saudi Arabia, and all those kinds of things. Apparently, Saudi Arabia, I put this out on Twitter, folks. If you don't follow me on Twitter, go to, and you have a Twitter account, go to financialissues.org. Not financialissues.org, Financial Issues. It's at Financial Issues. It's not at Dan Celia because nobody can spell my last name. So I use at Financial Issues. And you can pick up my Twitter. I send out just about so many things that I talk about. I send out full articles on in the morning prior to going on the air, and it's interesting stuff, so you can catch it. I send out a lot of other things that I don't talk about that I would like to, but I don't. So check it out on Twitter, and you'll see all those feeds every day. You'll be able to follow me on Twitter. It's at Financial Issues. Now, if you don't have Twitter but you have Facebook, you can like the Financial Issues Facebook page. And that is facebook.com/financial issues. And you'll see all those same articles because they're posted on Facebook as well. Anyway, that's what's happening in the markets. So we'll continue to watch that. But right now, the indices are in positive territory. No great shakes. The Dow's up 19. The S&P's up 2. So not a lot of movement, not a huge movement. But, of course, we're looking at these home sales numbers. So we'll watch that again. Some negative numbers. According to realtors, they're not concerned yet. They're not concerned yet. I don't know when they'll be concerned. I guess next month they'll get a little bit more concerned. 866-300-9298. 866-300-9298. I had to run quickly on Dennis from North Carolina who is no longer on the line, but called in right before the break. And Dennis, I apologize. It was a hard break, and I had to duck out. But what I was trying to get to, I mean, the lump sum option. There's a couple things I really want you to consider, and I really want you to look at. So, along with the lump sum option that you're going to be taking, they offer you an annuity option. They offer you a monthly income option, and I don't want you to just blow that off. We get so caught up in this lump sum option that we don't look at something that is very obvious that can be a very good thing. So I want you to look at that first. And it depends on what that is. Oftentimes I tell people that it's a no-brainer. You kind of have to do it. Sometimes, and it depends on the insurance companies that they're using for that option. So it may be good. It may not be so good. The other option is that you take the lump sum option, peel off a piece, and do some of it in a charitable gift annuity, creating some income. So that's another option. But I want you to look at your spending, and I want you to examine what you think you're spending and what your consumption is going to be every month. And really try to work backwards into that number and see what you can do to try to come as close as possible of securing that on a permanent basis so that you don't have to be living and dying by what the market is doing and what the economy is doing. And remember, anything you do that is market-driven, that is going to generate income for you based on the market, and if it's income that you need to live on, you are going to be at the mercy of the economy. You are going to be between a rock and a hard spot. No matter what the economy is doing or what the markets are doing, you've got to be in there. You've got to be in there generating some sort of income. And I don't, people need to get out of that mindset. So I want you to look very, very carefully at all of your options before you make that decision. And, don't get hung up on paying tax. That's not an evil thing. But I want you to think about monthly income and consumption. That is what is important. So don't discount that. I mean, I don't want you to be in a position. You're retiring early. 62 is an early time to retirement. Please, Dennis, I'm begging you, and anybody else listening, don't. Here's the problem, folks. By the way, 866-300-9298. Let me just use this as a coachable moment here. Here's the problem that has happened to Americans over the last 30 years. We have been rightly so, this is not a bad thing, but we have been conditioned through our 401ks at works, our IRAs, investment managers, TV commercials, that we have been conditioned during our working lifespan. So maybe from the time we're 18, if you started work right out of high school, or maybe, at the age of 22 or so, if you got out of college and went to work. But we have been conditioned that everything we do when it comes to 401ks, 403bs, pension plans, IRAs, whatever, to accumulate wealth. That's the mentality that we've all been living with and we've been conditioned on. Okay, so we have been conditioned that we've got to accumulate wealth at all costs. It doesn't matter. At all costs, the goal is to accumulate wealth. And there's nothing wrong with that. I'm not saying that's a bad thing, because if we weren't conditioned that way, there's that fear in me that we maybe would put it off, or we wouldn't do it, or we wouldn't be concerned about it. We wouldn't be saving. We'd wait till we're 50 or whatever. But it's a good thing that we've been conditioned to do that. The problem is that conditioning follows us after we stop our income earning phase of our life. So now it's a great thing to be conditioned that way while you have income coming in. But now we retire and we're still thinking about, creating wealth. I don't care what anybody says to you. You're listening to me because if you've listened to me for any length of time, I don't think like everybody else. Stop it. Stop it. It's not time to be thinking about creating wealth. It's time to be thinking about preservation of what you have, and it's time to come to the realization that you're likely, or you or your spouse, if you're married, one of you are likely to live to be in their 90s. That's a lot of years to be living off of what you have accumulated. So when you retire at 62 as opposed to 68, you now have added some significant years onto that living on what you've accumulated. Okay, which is fine, depending on how much you've accumulated. But you've got to be thinking about your income. I don't want you to think about your income. You retire when you're 62. I don't want you to think about your income when you're 62 or 65 or 68. I want you to think about your income when you're 80, 85, 90. You need to be thinking about what it is you're going to be doing to create income. And I'll tell you, all I can tell you for certain, I can tell you what you're not going to be doing. You're not going to go back to work to create income. I'm certain of that. So you have to think that far ahead of time. If you don't, you're doing you and your spouse or your family a disservice. So I want you to be thinking about consumption and spending, all right? And income, obviously. 866-300-9298. Give us a call, 866-300-9298. Financial Issues. I'll be right back. Hi, this is Dan Celia at Financial Issues. Would you consider partnering with me on financialissues.org? Go to financialissues.org if you would like